Financial markets are incredibly complex things, and mastering price action is not that easy, but you can get the cheat sheet absolutely free of charge from CTKSmethod.org. There are definite relationships between different charts. Here we're looking at Bitcoin versus the Nasdaq 100. You can see clearly that Bitcoin and the Nasdaq 100 are following each other. You might be tempted when you look at the VIX to say the VIX and Bitcoin, for example, don't have any real relationship with each other, but that actually is not the case. When we invert this particular scale, you can see pretty plainly that the inverse of the VIX explains Bitcoin's price action. You'll find that the cheat sheet is incredibly valuable and it is absolutely free. It is composed of 7 rows, row 1 through to row 7. Every single row means something, and we're going to go through them right now. Let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS method. If you're new, a very warm welcome and welcome back CTKS family. It's time to look through the cheat sheet. We'll start with row 1, which basically measures risk on or risk off activity. If the VIX is going up, we anticipate the main markets to come down, so please be aware row 1 is extremely important, and row 1 and row 2 are like best friends. They hang out together. But they're often like fire and ice. If row 1 is going up, we expect row 2 to be coming down, and of course vice versa. We can use this as confirmation. Row 1 consists of the VIX, the volatility index of the main markets, also the DXY. What do we notice? They're coming down. Dollar-yen is coming down as well. Looking at row 1, we can see the VIX, the volatility index of the main market, is coming down. What about the US dollar currency index, the DXY? It's also coming down. And when it comes down, guess what Bitcoin and the main markets are doing? They're partying. What about dollar-yen? Yes, that's coming down as well. And you use dollar-yen and the DXY together. They tend to confirm each other. What about the 10-year and the 2-year? That's curling over. That's also placing some pressure on inversion. So that's quite interesting at the current time. And we've also seen crude oil just tank just recently. Now everything is coming down, and this is good for the main markets, and it's good for Bitcoin. Moving across to row 2, when we look at high-yield junk bonds, they're really important to keep your eye on. If risk off is entering the market, in other words, risk on is just decreasing, we would expect junk bonds to also be decreasing. They are as of the current session. Don't forget, this is not real time. This is last session inside the main markets. But gold and silver are real time. These are the futures. So what we're looking at here at the current time, it's gone a bit all over the place, but basically we're seeing a bit of a retracement at the current time. The euro dollar is a very good index and very good indicator of where Bitcoin and crypto could be going. So please keep your eye on that. The blue line here in the background is Bitcoin. And what about the Aussie dollar? That dip, just like the euro dollar, it can also be quite a good indicator of where crypto is going. A lot of people think that you only need to look at Bitcoin in order to understand where Bitcoin is going. This may sound really intuitive, but it's utterly, completely wrong. It's just one of those things that will take many, many years to understand. But of course, we go through the cheat sheet and you get it already. Your chart is always influenced by other charts. So what's interesting here is the Aussie dollar and the euro dollar are just recovering at the current time. One of the things that you want to take note of, what is the most stable and articulated relationship between a chart and Bitcoin? That's where you want to synchronize into. Right now, on row 1, it was the VIX. On row 2, it's the euro dollar and the Aussie dollar. Before we dive into row 3, which is the major indices, here we're looking at the S&P 500, also the Nasdaq, also the Dow Jones and the Russell 2000. Now, what do you notice about these particular charts and the blue line, which is of course Bitcoin? Do you see they follow each other? Is there any correlation? Do you see any kind of association whatsoever? Please let me know inside the comments. Understanding interdependencies like these is really important because when you do, it's a literal game changer. Inside row 3, what do we see with the directional bias just inside the market? Well, it's pretty plain at the current time. It is coming down. However, we do know from row 1, if the VIX continues to come down and the euro dollar continues to go up, well, the markets may be in for a really pleasant surprise. They're going to go up, that is. Inside row 3, the S&P 500, the Nasdaq, the Dow and the Russell were all as of the end of trading session on Friday in the US market. That's why we look at the futures to understand where things could be going. And what are we noticing here with the Nasdaq, the S&P 500, the Dow futures and the Russell 2000 futures? Well, they're coming up. They did dip down, but they're on their way up. Now, what does that mean for crypto? You can see it already. See that blue line? It's already telling you real-time news. And this is exactly why you want to pay attention to what's happening inside the markets. You may remember if you were trading Bitcoin just a little while ago, it just bounced up. Why? Because the major indices did exactly that, and they brought Bitcoin up with it. And if Bitcoin is going up, guess what? The entire crypto market is coming up as well. Which brings us into the subcomponents of row 3, which are Apple, Microsoft, Tesla, and Nvidia, just from our stance. And what do we notice? And of course, this was from the close of the markets on Friday. What we've seen is a bit of downward pressure, with the exception of Tesla, which has been shining. By following the subcomponents of the major indices, you can get an idea if the major indices are going up or not. And of course, you need to know that because Bitcoin and crypto will follow the major indices. So it's pretty important. And what are we noticing in pre-market trading? This is quite intriguing, isn't it? We're seeing a big push up because of the futures doing so well today. If you're trading and investing inside financial markets, you need to know how to read across charts. Row 5 is all about diving into the crypto market, total crypto market cap, Bitcoin, Ethereum, and from the stock market, MicroStrategy. We'll zoom in on that a little bit later on. But what we're seeking to understand here, what is the direction? Well, what's the direction of the futures? They're looking up. And what's the direction of the crypto market? It's looking up as well. Therefore, we need row 1 to weaken, row 2 to strengthen, and thereby strengthening row 3 and row 4, as well as this row, row 5. And one thing that's really important to note, you can see here in blue, that's Bitcoin. In the background, the candlestick pattern is Ethereum. As Bitcoin goes up, what is ETH doing? It's going up. But if Bitcoin comes down, what is that doing to Ethereum? It's pushing it down. You can see this directional bias is incredibly important to understand. And if you're new, you may think that this only applies to Ethereum, but it doesn't. It applies to the entire crypto market. Every single token. Having a look at MicroStrategy, it came down with all of the other big names on Friday. But on Monday, hey, it could be a very different situation, and we're already seeing signs of that right now. Row 6 are the proxies of the major ones. For example, Bitcoin has Litecoin and Bitcoin Cash. And what are these doing at the current time? We can see that Litecoin is just losing a little bit of steam, but Bitcoin Cash is doing quite well. What about BNB Binance Coin? That's also doing pretty well. And Ethereum Classic, a counterparty to ETH, well, not a counterparty, but a counter token to Ethereum, is also doing well. On row 7, we're getting deep down into the inner workings of the crypto market. ADA, Cardano, just following Bitcoin's gravitational pull. What about Solana? Also following it. What about Doge? Doge has been so strong recently. Probably a lot to do with Elon. Yep, that is doing very well, but it's still following. If you look at Bitcoin and you look at Doge, it's still following that gravitational pull. What about XRP? It's also following Bitcoin's pull. I'd like to help summarize what I see inside the markets. With the DXY coming down, that's taking pressure off risk-on asset classes such as crypto, and crypto is very risk-on. The fact that the Dixie is going down is just pushing the euro dollar up and the Aussie dollar up as well. It's also weakening dollar yen combo. And the DXY has been so overextended. So far globally, global market health looks okay. We're not seeing signs of any breakdowns at the current time. The UK market could do a little bit better than flatline like it's doing at the current time. My focus behind sharing the cheat sheet, when you look at something like Bitcoin, hopefully you're looking beyond Bitcoin into the DXY, which is very important at the current time, as well as the VIX and the Forex pairs, gold and silver, which are impacted by the DXY and the yields. You don't want to just look at the crypto market and say, from that particular price chart, you know where things are going. It's not the way the actual market works, but a lot of people think that it is. Hopefully, when you see a chart of Bitcoin doing something like this, you're looking at it and saying, okay, DXY going down, VIX is going down because the futures on the major indices are coming up. That's the perspective professional investors and traders have, but we also need to look at the structural levels as well. Without a level of structure inside and informing our particular investments and trades, it's very difficult to know what to do. And you can see that just below 68,300 was a level of once structural resistance that got rejected on earlier today. And that has actually found a level of structural support around that 67,500 because the DXY started to crater. You can remember the DXY particular chart, and it was coming down like that. That is the driver that sent the indices up at the same time and pulled Bitcoin through that 68,300 level of structural resistance. There's actually a lot to looking at financial markets, and when you get to understand how to look across different charts, it's absolutely sensational. What could happen in the next 24 hours? The bullish case favors a movement up to the 69,750 mark. If we end up consolidating around here, we could just wobble a bit. But if we expect the bears to take over, we would expect to lose this 68,300 level and then get caught in all of these levels of structure. And there's a very strong one just around that $66,000 mark. Now the good thing is, it wouldn't be a random movement. If the bears gain control, that means certain things. That means that the VIX is coming up, the futures are coming down. We would also expect the DXY to be coming up and the euro dollar to be descending. Therefore, when you look at price action, to understand if it's a bullish case scenario or a bearish case scenario, it largely depends on all of the other charts. It takes a little bit of time to get used to looking at things in this manner, but all professionals do. If you're liking the content so far, please smash that like button, and please let me know what topics that you would like me to cover in upcoming videos. Looking across charts is one thing, and understanding how different charts impact price action. That's a really important thing that you'll need to be able to do. The other equally important thing is to know where the structural resistance levels are and the structural support levels are. A lot of people would say, this is a structural resistance level that turned into a structural support level, and this was once structural resistance and now is structural support. If you were doing that, you'd have to go back in time to try to figure out what's above here. Now, what if you went all the way back in time and you did it according to level 1 and level 2 standard certification? That would mean that you would start to mark up charts in a very different way by understanding the structure of the chart across all of price history. That's exactly what these lines represent. They're lines that are very, very powerful. They're the most statistically significant support and resistance lines in existence in TA, or technical analysis. Now, what we saw, because of the futures increasing and also the DXY backing off and the euro dollar gaining strength, we managed to come up into this structural resistance area. The thing to understand, structural resistance is just exactly that. It's like a wall of sellers. We have so far had a lot of positive momentum up, and if the futures keep on going up, we will bypass this and the bullish case will be in session. And boy oh boy, could it get really, really bullish as well. One of the things that you always want to take note of is where structural support and structural resistance levels reside inside the chart that you're looking at. And what do we see here? There's a lot of gap between where we are now and the next real structural resistance level. Don't forget, it's going to still depend on what the DXY does, and we want it to come down, what the VIX does, we want it to come down, what the euro dollar does, we want it to go up, and so many other things. But in terms of a bullish case, this looks really good. Having a resistance level, a light one, up at around the $2.317 trillion mark, and this much heavier resistance, just a little bit under the 2.33 trillion. It's fantastic. And we also note that we do have a lot of structural support, and this is structural support drawn across and analyzed across all of price history. What does this mean practically? If the stars align and we see the VIX coming down, the DXY coming down, the euro dollar coming up, you get the idea. If that happens, we could move very, very quickly up to the 2.33. Now, if it becomes bearish and instead of the VIX going down, it starts to come up and the DXY starts to come up and the euro dollar starts to go down, junk bonds start to decay. Again, you get the idea that it's really important to look through the different rows. Even if that occurs, we've now created a degree of structure, so we're not going to just fall off a cliff like most people think. And this is exactly why you need to know where the structure is. If you've got a lot of structure and you've managed to make your way through it, we didn't get through it here, we're starting to get through it right now. If you get onto the other side of that, that acts as structural support and it limits any downside activity in price. In the comments, please let me know, and there were so many fantastic comments from Friday's video about how to handle losses and so many tips and tricks and just beautiful sharing. Please make sure that you check it out. Now, the question for today, where do you think total crypto market cap and Bitcoin and the actual markets are heading inside the next 24 hours? Your thought processes are far more important than the actual outcome, because we know we have to track it. It's not as if we can say, it's just going up, let's just pack up everything and go on holiday. We wish that was the case, but it's really not the case at all. You need to keep your finger on the pulse and understand, is the bullish case coming through or the bearish case coming through? Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.